Bitcoin rises as headwinds for ETH trigger a dynamic shift in order flow. Hey guys, it's Keith Allen. I'm back in black, baby. Oh man, it's been kind of an interesting week. Still getting settled in here at the new place. Don't really have my studio set up, so you get the big black background right now. Hope you're having a good week, man. Let's finish strong. We're seeing some price rebounding just a little bit here, which is certainly a positive. But what is behind all this action? What's behind this price action? And most importantly, what is going to happen next? So let's go ahead and frame this thing up. And before we climb in, oh gosh, it's been a little while since I've done one of these. So sorry if I'm a little rusty on the, the preamble, but do me a couple of favors. Number one, make sure that you are subscribed so you don't miss any of these future alpha drops. Okay, hit that subscription, tick the little bell so you don't miss any of the future streams. I drop a lot of free stuff here, man. So if you want to take advantage of the free alpha, the knowledge, the analysis, I suggest you subscribe so you don't miss any of them. Also, a reminder, live chat is open. So this is for you. If you've got questions, I'll do my best to answer them. If you have insights, please share them. We all learn together. High tide raises all boats. So keep it coming. And lastly, invite a friend. Help me grow this channel. Bring some people into the stream. We appreciate that. And for that matter, bring them into our Telegram community. We've got a fantastic community of traders there and a lot of ideas getting exchanged in the community. So I hope you'll join us there if you haven't done so already. Now we can go ahead and climb into the charts. And I want to show you what really caught my attention here today. The title was, Bitcoin rising on ETH headwinds. And we have seen ETH run into resistance here after an all-time high, by the way. This all-time high, I think we all felt like ETH was headed there. And, of course, then we got the Tom Lee narrative on the ETH Treasury narrative and really what's behind that ETH Treasury narrative. It's really not just about the fact that these companies are creating ETH Treasuries. It's about the fact that the banking sector is embracing ETH. They're building on ETH. So it's not just speculating on what ETH is going to do. It is going to be the backbone of the new financial system, and banks are building on it. Okay. So know that it's not over for ETH. Now, what was a red flag for me on that move was that it never actually created an all-time high. And let me share the chart here so you can see what I'm talking about. Let's share this one, and you can see that ETH ran into this resistance at the first the all-time high, right, and an incremental all-time high. The prior high was at like around 4,800. Price went as high as 49.55 on this exchange, maybe a few bucks higher. But the fact that it couldn't break 5K was an indication to me that things were stalling and there wasn't a lot of momentum in the move left at that point. And so typically we'll see profit taking on new all-time highs. And that's exactly what happened. Now, in terms of the macro setup for ETH, obviously nothing has changed in terms of what the narrative is. So that's positive. And then in terms of what the chart is showing us, yes, we have some low time frame, a daily time frame resistance here at the 21-day moving average, right? And it has been now a good solid week, right? 1, 2, 3, 4, 5, 6, 7, 8 days now, stuck under this 21-day moving average. But if we look at the weeklies, zooming out a bit, we have a golden cross through both the 50 and the 100 moving averages. This to me paints a better picture in terms of the macro trend. And so I think, sure, we're getting a little pullback here, and I'm fine with that. We could actually even see this pullback go further. It would be, in my opinion, quite healthy to see things pull back right here to this quarterly open. This is a timescape level here, and these have proven to be very, very valuable here. So if you haven't been turned on to timescapes yet, and I can see we have two overlapping here, so I want to see what we're looking at. I wanted to see if one of these was for 2025. While I like the current timeframes best, the fact that they are stacked together here like they're this even historical ones is of some significance to me. So as we can see, the yearly is right here at around 3,600, and we could even see a support test all the way down to this level around 3,500 conceivably. So let's see specifically where the yearly was. That was the first week of the year, but the actual first of the year open was, here's the quarterly way down here. I mean, I'd be surprised to see us go to 2,500 from here, but certainly worth paying attention to. I think what is most likely is and conceivable. So here's the yearly open right here. This is what I was looking for. Yearly open is right there around 3,300. That would be an ugly move for a lot of traders right now. But if you have conviction that ETH is going to hold price and go higher in the coming months or years, then you're well positioned to add to your position on these dips. Now, if you're swing trading or you're day trading, and you see this continued breakdown, I would be looking for some profit taking if you haven't already done so, and then wait for things to stabilize. We did get some news today that might trigger some price action, trigger some volatility, and that is that there's a spike in unemployment. So that means we now have an increase in the probability of a September rate cut. This has been changing a little bit here these past couple of days. A few days ago, I think it was in the 80%, in the high 80s. Now it is upwards of earlier it was at 93%. I haven't looked at it since the new data came out. So let's see. 98% probability of a Fed cut coming up on the September 17th meeting. So as I said yesterday in my analysis, I felt like we could see price, especially with Bitcoin, start to rally towards that Fed cut coming, or a potential Fed cut coming on the 17th. And if we, since we're talking Bitcoin, Bitcoin's been struggling too a bit here. Broke down from the trend, found support at the 21-week moving average. This is important here. Holding support at the yearly open, also important here. I was less rattled by losing the trend line here on this on the daily, anyways. Right? I had said I was hoping to see it reclaim the trend by the weekly close, and we can see we're fighting for that right now. So, and I think this is largely based on that the idea of a Fed rate cut. Now, what triggered that? Of course, we know there's been pressure from the White House, blah, 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 blah. But really, it's the change in jobs and the unemployment outlook now indicating. Let's see what we had in terms of misses here. ADP employment change was low. Continuing jobless claims, that was low. That's actually positive for the economy. 4-week average on jobless claims was slightly hot. Non-farm productivity hotter than expected. Labor costs cooler than expected. So, and we're then I'm looking at this. That was yesterday. So today we have an unemployment rate, non-farm payrolls. Oh my gosh, look at this, a huge miss, right? Forecasted at 75K, comes in at 22K. Unemployment rate bumps up to 4.3. It's the highest we've seen in a long time. So it's not a surprise that we're seeing this, and these are things that the Fed looks for a rate cut. So things are shaping up for that to happen here. Non-farm payrolls private, also a huge miss. U6 unemployment rate comes in hot. That's government jobs. So all in all, um, this is why sentiment is leaning towards a cut. Okay, and in terms of what's been happening with capital rotation, we can see here, if we look at the ETFs, we can see that there's actually been a few days of outflow, net outflow for Ethereum. And I've seen posts, the noise on social media is so freaking stupid. People go, oh, BlackRock's dumping, BlackRock's dumping. BlackRock is not dumping. BlackRock is executing what their customers are asking for, right? Customer buys an ETF, they have inflows. Customer sells ETF, they have outflows. It's as simple as that. It's not Larry Fink trying to manipulate the market. Um, let's see. What's your take on the current non-farm payroll jobs? While unemployment hit the forecast, the payroll info is 3x below what's forecasted. Um, I'm no economist. I don't know how much we trust the numbers that they put out to us because, we know that that's been manipulated in the past or revised, whatever. And we know that Trump is looking for um, a cut, and this kind of information gives us a cut. But I would say that it seems evident that there are cuts happening. AI is triggering cuts. By the way, um, there is concern of recession, which is another reason for people to lean up their businesses. And in terms of unemployment, we've expected a spike in unemployment for a really long time, and it didn't show up, and it never really showed up under the Biden administration, and we don't really know whether or not we were getting accurate numbers. It is what it is. The market reacts to what's printed, right? Market reacts to what the numbers are. So in terms of the value of those misses, I'm not the expert that can really expand on that, but the net effect for us as traders and investors is it is likely going to trigger a rate cut as soon as the September 17th meeting, and market tends to respond very positively to that. I'll leave it right there. If anybody else has some insight to share with that or expand on that, by all means, please do it. And Mr. McGee, I appreciate the question and the engagement and the follow. By the way, hope you subscribed. So let's look at how this order flow is changing things a little bit, right? So we've had 1, 2, 3, 4 days of outflows on ETH. What is Bitcoin ETF doing? That's been mixed, right? Yesterday, a bit of a sell-off. Meanwhile, a couple of positive days to start the month for Bitcoin as ETH ran into that headwind. It's been 8 days of resistance for ETH so far. So I think this all kind of points to the fact that people are getting a little bit nervous and wondering what's happening. Again, this new unemployment data may change things a little bit here as we head into that September 17th rate cut meeting. I want to take a look now at let's look at the Bitcoin chart real quick. Again, we talked about finding support at the 21-day moving average and the quarterly timescape levels. Super important. Holding that yearly open also super important. If we lose this, actually not just that weekly open, but if we lose the real annual open down here, this is where I have real concerns about cycle being over. Okay, we're obviously a long ways from there. I think we're in a solid position here at this stage, and I'm still buying dips at this point. And I suggest, we could chop, even if we get a recovery here and we get a rate cut, that rate cut could be at least the knee jerk reaction could be a sell the news event, and then things and then price recovers. But right now we have a pending death cross between the 21-day and the blue 100-day moving average. Um, it's going to take a big celery stick here, followed by a series of candles above this trend line to have any chance of pulling out of this death cross, this imminent death cross. Um, and so we obviously want to see the 21 unwind from the 50 here at some point to get us back in the game and get back towards price discovery and return to all-time high territory. Gosh, it's been so long since I've done one of these. I haven't even updated the all-time high. Let's see. We're at new high is at 124,517. So let's just do this while we have the chart open. 124. 517 and call that done. And now let's look at what's happening in the order book, right? So as you can see, we have a kind of a mixed thing going on with whales here. Brown whales taking some profit, purple whales buying a little bit here. Purple whales have been out of character for a little while here. And in the short term, the buy volume from that purple whale class has not been as high as we might expect it to be. And so this has been an indication that they're selling, right? They're essentially they're trading the range just like the rest of us. It's not always accumulation. Yes, there's distribution. When you get to these ranges where price is consolidating is where you see that happen, right? But they're buying on the dips. And as you can see here, price had recently dipped down to below 108K, and it was short term, right? It was a short term buy opportunity here on these dips. Brown whales had bought it. Let's clear out some of the smaller order classes. Brown whales were buying and then started selling as price rose, and so this is not people fighting the trend. This is how smart money works. You buy when price is going down, you sell when price is going up. Eliminate slippage, and then your dollar cost averaging your way in and out. And so the recent dip here to about 109K was bought here, and these moves that these brown whales is selling is incremental. It's not a lot, as you can see here. So if we look at it on the daily time frame, we can see purple kind of likes this and just cleared some resistance right here as we speak. So let's see where we go from here. Can price make it back to this 120K level? Liquidity isn't so thick here that it's not possible to go test this here, conceivably even over the weekend. We'll see if we get any guardrails up, like maybe this 115 holds. It's not huge there, but that's something to watch. But a little bit surprising to see brown selling here because they have been, for the most part, accumulating. But as you can see, the selling is just, it's incremental, right? They've barely sold 0.5% of what they purchased in the past 6 months. So keep that in mind. Don't have knee-jerk reactions to every blip on the chart. And as we zoom out, you can see we've had a little bit of spoofy action here on the bid side. Here, brought it back down here, and now moving back up. So price liquidity is moving up. Bids and asks are stair stepping up, and that's always a recipe for price appreciation. And you can see we just knocked out some of that liquidity there. So price is trying to work its way up, and so that to me speaks positively to the macro outlook, despite the fact that we could see more chop and more downtrend before we get to the actual September 17th meeting, right? What happens over the weekend? Anybody's game. Kind of Wild Westy in this sport, if you will. So keep that in mind as well. Um, some other metrics I want to share with you that might give us some perspective on the macro outlook. You know, um, there was a lot of hype for alt season, and alts are now mixed. So while I'm refreshing that, I want to show you this one. Um, Everybody's looking for alt season, right? And we look for these divergences between Bitcoin dominance and total three and ETH dominance, and we had it for a little bit, but it's just not the classic alt season like we've seen in prior cycles just has not materialized. And quite frankly, I I I've been back and forth on this a little bit. I felt like for a long time that we're not going to see the classic alt season that we have grown to know and love. Um, and then we get these surges where it looks like alts are rallying, and then it doesn't materialize. So it's not, in the past we would see alts really just about all of them rise together, and now it's a bit more mixed. So the simple view here is that Bitcoin dominance is finding support, um, and it lost its key trend, right? But it's finding support and trying to bounce here. ETH dominance has rolled off the top a little bit, and total three, that would be your top 100 coins, excluding Bitcoin, excluding ETH, and excluding stable coins. So, your larger cap, larger and upper mid cap altcoins are kind of chopping sideways here. And so the good news is stable coins are currently moving downwards, right? There's a trend of a double bottom here and higher lows, but at the moment it's rolled off, and which is an indication that money's starting to rotate back into these risk assets. And so if we look at some of our metrics here in the MI dashboard, we can see that the correlation of beta to alts to BTC is really high beta, right? And that when we get to those high beta moments, which you can see evidenced here, and you can see here, that typically historically has signaled local bottoms, which means, yeah, we're hovering at or near a local bottom now, right? We just tested sub 108K. So I like this in terms of being bullish. And if we look at if we want to get more granular detail, we can see again a situation where a lot of alts are capitulating, right? This signals this blue here, you can see, is a signal of capitulation, and you can see that we're heavy blue here, and look at all these other periods where we were in that dark blue, right? That was a local bottom. And again here, right? You see it here, local bottom. See it here, local bottom, things top. Doesn't mean things can't go back down again, because listen, the market is organic. It ebbs and flows, it moves. But in terms of where we sit right now, this is a sign that we have found a local bottom, or still trying to establish it, but we're in that range, we're in that zone. Now to give you some granular view of, so again, this speaks well to the bullish macro outlook. So if we want to get some granular detail on individual alts, we can look at price returns and drawdowns, and we can see that a lot of them have had some drawdown, but there's been a select few in this bunch that are doing pretty well, right? So you see the red, that the red here signifies more upside, whereas the blue shows drawdown. So, let's see, coins like RLC up 18% over the past 14 days. Where's another one? QTUM up 37%. PIFE up 55%. So select alts are making big moves. MAV up 44%. LRC up 15%. So it's not a situation where everything is soaring like we had at the beginning of July, early July, where we really saw a lot of upside. But the upside wasn't as big as we'd seen in historical alt seasons. So I think what we're learning here over time is volatility is compressing because there's more money in the game. There's more smart money in the game. There's less selling in terms of Bitcoin and ETH in particular. There's more accumulation happening there, so supply is getting cut down, and then money's not being distributed as wildly across alts as maybe it has been in prior cycles. So it's about finding those quality projects, the ones that have good use cases, the ones that have good active communities, the ones that have active devs, versus just the every shitcoin and meme that there's a community trying to pump. The pump and dumps ultimately will burn you. If you're following a group and they're going, okay, guys, we're going to pump it today at 4:00, I'm telling you, you are going to get wrecked. So take the money and run, and then learn how to become a better trader, because you might make some fast money, but those tend to go south hard, right? Don't be greedy. Take your profits. Set your profit targets before you even open the trade. And if you can split those up with split TPs, and if you want to let some ride after you've taken some money off the table along the way, then by all means do so. But at least lock in some profits before things revert on you, because the corrections are going to be hard, fast, and unfucking forgiving. All right? Don't fuck around. Don't fuck around and find out. Take profits along the way, especially with alts. Take profits along the way. If you're, talking Bitcoin and ETH and you're in it to hold and, really trying to use it as a store of value, then maybe you're more conservative with your profit taking in terms of, you're just hanging on to it. I do still take profits along the way, incremental, but for the most part, my ETH bag is riding high. I think that is about it for the day. I'm going to wrap it right there. I'm going to leave you with a parting shot of what's happening in the Bitcoin order book. Let's drill it down to the daily time frame and see if we can see anything granular here that deserves our attention. At the moment, as you can see, we have some buying happening. Look at this. I told you the brown whales were going to come back in. So this is how people get wrecked too. All right. So you see this action happening and they go, oh yeah, it's happening. It's on. We're heading into the weekend. And so don't get trapped, right? There's ranges to buy and there's ranges to be cautious. And if we look at where we sit in the charts, this is good. This is looking like an attempted breakout move above the trend line and above the 21 moving average, which is why those brown whales, those mega whales came back in. We could find technical resistance up here around 115K, which is at the 50-day moving average. And as I showed you in the charts, we have some ask liquidity stacked at that level that correlates with that technical resistance. So I would be cautious about getting trapped here, right? There's a little bit of a move here, not a big one. There's a little upside here. I mean, that juice might not be worth the squeeze. Just 2% here at this stage. If you got in down here, right, then you're loving this move. There's limited upside until we clear this 50-day moving average. If that happens, you have a much better risk to reward setup just to get to the all-time high, I would look at it this way. Let's look at the risk to reward on a trade that you might consider. Okay, so if we always want to make sure that our risk is less than our reward potential. So if you were to take a trade right here and know that you have potential resistance at this 115K level, which is barely 2% up, then that doesn't leave a lot of room for downside. And I would say that support would be at this timescape level. I don't like the risk to reward on this because you have more risk than you have reward. You could take that tighter and just take it to the trend line. The setup is there in terms of risk to reward ratio. I'm just not confident until this candle closes. I'm not confident you don't get a flush back down below the trend line. So this is why I worry about a fake out or a trap here for anybody. But again, that outlook, that longer term outlook, especially based on the fact that things are shaping up for a rate cut, hey, maybe we run. I just want you to be aware of the risk involved with taking a position here versus if you took a position looking just to reclaim the all-time high. You came in after this breakout, or at least a move like after today's candle closes. If we get a close above the trend line and above the 21, we could conceivably see a retest here over the weekend. You buy that support test, and then in terms of even if it were to go down here, that's still the risk reward is still better, even if you had a looser stop loss trigger here down here. So just something to consider. That's the way I look at it. I'm not telling you how to trade it. I'm just telling you how I trade it. Okay. And I took my position down here. So I'm not monkeying with what's happening here. I do me, you do you. That's how it works. Hope this has been insightful for you guys. I appreciate the follow and the engagement. And if you want to make sure you don't miss any of these, make sure you tick that little bell up there and subscribe so you don't miss any of my future streams. If you haven't joined us in the Telegram community, link is in the description. Check it out. You're going to learn a lot along the way. Hope you guys have a great weekend and do something you love with the people you love. Here's to trading smarter.